Welcome as people start to come in, or give everybody a chance to get your situated. You'll be coming in today muted and with your video off so we can improve the connectivity. So you should be able to see a slide and hear my voice. How is that working? We getting people in, and can you hear me? So moving, hopefully people can. We're going to be using the chat today though. So since you won't be able to ask questions through the microphones, if you can open up your chat, that will help a lot. And we'll be sending out messages and links throughout. And we're just going to give everybody just one more minute to kind of get settled, and then we'll get this kicked off. If anybody can give me a thumbs up that they can hear me or reply in the chat, that would be great.
I think the chat is disabled.
All right, well, that would be something good to know. Let's see, let's get that fixed. Perfect, this is a good test. All right, let's see now. Can anybody send me something in the chat? Perfect, thank you. A little bit of text just to get it all going. Wonderful. Yep, it was disabled. You're right. Now we're good. Okay. Well, since we have everybody now, I think, connected on, I'm going to go ahead and get started. We're welcome to our webinar on What's Your Job Worth? We're going to be covering a whole bunch of different things, and we're hoping for a very engaging presentation today that will give you a chance to learn some things and ask questions as well. So we will be taking questions in the chat as we go, so don't hesitate to get those out there. I'm Kathy Sweedler. I am a University of Illinois Extension educator, and I teach personal finance, mostly in East Central Illinois, but also statewide. And today we may be going even past our state. So we'll see who we've got on in a minute. Nikki, would you like to go ahead and introduce yourself? Nikki, you might be muted.
I was, sorry about that. I am Nikki Jancola-Shanks, and I am the Director of External Affairs and Student Loan Policy at the Illinois Department of Financial and Professional Regulation.
Wonderful. And we have lots of different people in the chat today that will be helping out answering questions. And thank you for the reminder to turn on closed captioning. So we've got that going and we're recording. So I think we have most of the pieces we need. I'm going to turn off my camera as well, just so we get a little bit better recording quality here. And we'll just start moving through this. So, right, so before we get too far into things, I do want to acknowledge that the GetSavvy team represents organizations across the state of Illinois, which rest on the land of multiple Native nations. And so we really want to acknowledge and recognize that we live and we serve the state of Illinois, which includes ancestral lands of many Native nations, as listed on the slide. We have a responsibility to acknowledge these Native nations and to work with them as we move forward as a vibrant, inclusive institutions. Okay, so what we want to know now, we know where we live. We'd like to know where you live, just to give us a sense of who we're talking to today. So if you could put in the chat what state or county you're logging in from, that would be wonderful. And I think if you haven't used Zoom before, look on your control bar. There's usually like a little pop-up thing that says chat, or it could be hiding under your 3 dots of more. And that chat just went by so fast, but we've got people from Missouri, we've got Champaign, Virginia, Cook County, McLean, Coles, oh my gosh, Chicagoland, Lots of great places being represented. It's wonderful to have so many people on and joining us today. And we know that your comments and questions are going to add to our presentation today as well. So thank you for being here and welcome. Okay. Okay, I'm going to turn this over to Nikki at this point to kind of get us started and kicked off.
All right, so just a few learning objectives that we hope that when this presentation is complete, you'll be able to walk away with this knowledge. So first, to identify a variety of job benefits that are available to employees depending on your job, and they're maybe not all offered that we talk about, but just to make you aware of different choices, and to understand the basic value of and cost of health insurance, explore some of the differences with employer-sponsored retirement plans and how saving early can definitely help in your financial planning. And then also know how to maximize job benefits in order to increase your net worth. So Kathy's going to launch a poll for us. Just let us know where you are in the job seeking process. All right, so it looks like the majority of people have a job or have not. Then second place is not started your job process. So for those people that have a job, this may be a great review of things to think about. I know that when I was putting it together, I was like, oh yeah, I need to check this for me. And then for those who are in the middle of the job seeking process or about to, you know that you will be starting soon, these will hopefully be all things that you could keep in mind. All right, so why do benefits matter? So it's important to realize that your job is actually worth more than just your salary, and that's your benefits. Your benefits, if you have a better understanding of what they are and how to utilize them effectively, you'll be able to increase your standard of living, take better advantage of the benefits of compound interest, which we will go over in detail, and make decisions about different employer-sponsored retirement plans. So all of these types of choices with benefits add to the value of your job. All right, so just using the chat, what different kinds of benefits might an employer offer that you think of when you hear the word benefits? I see health insurance, stock options. Interest, that's a good one too.
401k.
Pay time off. Company match, yep. All right, yes. So we are going to touch on a lot of almost everything that you guys have brought up in the chat. We're gonna kind of go over all of those, really. All right, so these are examples that are offered by some employers. Obviously, not all employers offer the same. So these are different buckets to keep in mind when you're looking. So retirement plans, there's the defined benefit, there's 401k. I know somebody in the chat mentioned pensions, so different types of retirement plans. Time off work is often referred to also as PTO or paid time off. So there's different buckets of those: vacation, sick leave, family leave. It could also be personal time, etc. Savings and investments. Somebody mentioned stock options already in the chat, but also different savings programs for college or mutual funds. And then there are even more benefits such as wellness that could include sometimes even things like discount off of gym memberships. Insurance, all the different types of insurance that we will kind of talk about. And remote work is fairly newer benefit for jobs. All right, so first let's talk about insurance. There are tons of different types of insurance. We won't go into depth on all of them today, but these are some of the most common. So health insurance, which we will go into more in depth, Kathy's going to cover. So, but you know, that includes everything from prescriptions to medical treatments, to doctor visits. Dental, this obviously covers dental work, but even things like braces. So from cleaning to braces. Vision, you could go to the optometrist. I know personally, for example, my vision insurance, it helps cover costs of glasses or contacts for a year. Disability insurance, this is useful if you get injured and are unable to work, either permanently or temporarily. Life insurance, so this is to cover any liabilities you or your family may have should you pass away. And then unemployment insurance, which if you are out of work, you entitles you to still receive a small paycheck. And now I'm going to turn it over to Kathy to talk more in depth about health insurance.
All right, thanks, Nikki. I just wanted to jump in and add one comment about disability insurance, because I think that's one we sometimes miss and don't really think about. And especially if you're a younger person, you know, disability insurance is an interesting thing because it's not one that people end up using very much, thank goodness. But if something happens to somebody, especially while you're still at a young wage earner, where you can't work in the job you're trained for, that could really change your income for the rest of your life. And so disability insurance tends to not be very expensive because it doesn't happen very likely, but it can really help out in those catastrophic type events. So it's one where I think it's worth an extra mention that if you kind of pass over that in your job benefits, you might want to go back and look at it and see what does it cost and is it something you'd want to be fitting into your life. And as Nikki said, it could be temporary disability, like you have a ski accident and you get better, but it could be cover something where you might not be able to work in the area that you had trained in, especially, and would really be looking at a real change in your lifetime income. So just wanted to pop that in before we move on to health insurance. So we want to spend some little extra time in health insurance because one, it tends to be a big benefit. And two, as we were kind of chatting before the webinar even started, it can be really confusing. And so I think it's worthwhile taking a look at it to see what does it mean when a job says that it provides health insurance and what are the costs that you still might be needing to cover. So let's think about that though. If a job has health insurance as a benefit, what is the dollar value of that? So what do you think it would really cost if you were comparing a job with health insurance versus a job without health insurance? What is the cash value? Let's put that in the chat and see what we can get for some kind of idea on that. Go ahead and make your best guesstimate. What's the value of health insurance? Dollar-wise. There's always peace of mind. I get that part, but what about dollars? $600 a month? What would that be about? $7,200 a year. Okay, $300, $400 a month, $500 a month, $10,000 a year, $5,000 to $1,000. Quite a bit of range here. Any other guesses? 1,000 up to 30,000. Yeah, Stacy mentioned sometimes it's not just the cost, but the ability to obtain insurance can be harder or more expensive on your own. Okay, good guess and good comments here. Priceless. Yeah, so let's take a look. The Kaiser oops, I just went too far. The Kaiser Family Foundation does some research on this each year to pull up some dollars just to give us a sense of it. And this wouldn't be for everywhere, but we're really looking at over $7,000 annually for single coverage, and up to over $21,000 annually for family coverage. So this is a lot of money, right? No doubt about it. And so one of the things when you're comparing different jobs, if you have different job offers, is to take into account whether or not the employer offers health benefits. Now, keep in mind, just because they offer health benefits doesn't mean that the employer will cover all of the costs. There will be some costs that the employee will have to pay too. And one of the costs that needs to be paid, and often this is split between the employer and the employee, is the premium. This is just the amount you pay for health insurance every month. Just kind of like a car insurance premium. And if you're familiar with that, it's the cost of the insurance. And typically, it is paid on a monthly basis. It's not all of your costs, but it is often the big one that people see. And when people are making comparisons between different insurance policies, people tend to get focused on that premium, that monthly cost. Now, when we look at this, as I mentioned earlier, different people are going to pay for this. On the average, workers are contributing about 17% of the premium for single coverage and about 27% of premium for family coverage. Now, this is on average, which doesn't mean that that's what's going to happen at your workplace. So as many things related to job benefits, to really know, you have to ask your HR office, human resources, or go to other resources within your employer to find out, how does this work for you? Because that's a little different than the average, but this gives you some sense about it. Okay, so we've got the premium cost, but we also have the cost of deductibles. And just like car insurance deductibles, health insurance deductibles mean this is the amount that you have to pay before the insurance kicks in. And this has gotten to be a bigger and bigger issue in the last few years. Now, this is a kind of complicated graph, but let's take a moment to look at it. It's going from 2010 to 2020 across the bottom axis, and then looking at cumulative increases along the Y or left up and down axis there. The yellow line is looking at, that's the top one here. I'm not sure if you can see my cursor, but that one is looking at the increase in the cost of the deductible, that amount that people have to pay before the policy will kick in. The family premium cost is here on the orange line. The dark blue or black line there is where workers' earnings are. And then the bottom line is the overall inflation. As you can see, the annual deductibles have been going up at a much higher rate in the last 10 years than things like inflation or your earnings. And this is why it's a real big importance to point out. And I really want, if you walk away with anything today, I want you to remember that when you're shopping for health insurance, yes, look at the premium costs, but also look at how much is the annual deductible. In order to keep down premiums, insurance policies have been raising the deductible, and that is something that the consumer or you will need to have those dollars out of pocket, meaning you're going to have to come up with them if you have expenses that need to be paid. And it's really important to be aware of that, because they have really gotten into that high level that is causing a lot of people concern and really feeling uncomfortable and having a hard time paying for those deductibles. So how do we get around this? How do we deal with this? Really, one strategy that I want you to really seriously think about is saving up, having it set aside in emergency savings to pay that deductible if you need it, or at least a big percentage of it. Because unfortunately, we don't really have a crystal ball that tells us when we're going to get sick or we're going to have an accident, we're going to have medical costs. So we need to be prepared for that. One strategy to investigate to see if it's helpful to you or something you want to think about is that there are two different kinds of savings accounts that have some tax benefits that may help you save up to pay for these things like your deductibles and your premiums. One's called a health savings account, and one is called a flexible savings account. If your employer has a flexible savings account, then that's the one that you would use. And so you need to find out. First off, you have to ask, do you have an FSA, a flexible savings account? If so, then you can choose to have money taken out of each paycheck to fund this flexible savings account, and then use that money that you've put in to pay for your qualified medical costs. The money that you put into the account will be pre-tax, so you never pay taxes on that money. So in a sense, you're instead of paying maybe 25, 30% taxes, you can have more money into that account and pay for them tax-free. Now, there are disadvantages to these things as well as advantages, and you need to investigate those. We have a couple of the disadvantages just listed up here, but again, take some research on your part. But being aware that often there are deadlines of when you have to use these or you lose your balance are an important part of understanding flexible savings accounts. So you're not going to maybe want to fund it the way I think about it is I don't fund like for all the possible costs, but some of the more costs that I can kind of calculate out and figure that I'll have that will go into my FSA, and then, pay some without pre-tax dollars as well. HSAs, or health savings accounts, were established really for people whose employers don't have an FSA, and you can establish these at different financial institutions like banks and credit unions. So you may want to think about that as well. So I know that Brooke has put more information you can click over to find out more about this, but I just want you to be aware of them so that you can think about whether or not this the strategy you want to use to save for a deductible, or is there another strategy you'd prefer to use instead? There's lots that we could talk about with health insurance, but that's not the whole thing of our webinar today. But luckily for you, we do have a recorded webinar called Health Insurance Dissected. That's part of our Get Savvy series that you can check out if you want to know more about this. And we also have a great podcast called Tackling Insurance. And so that may be another place that you would like to go to learn more about things that have to do with health insurance. So we're going to move on for that, but keep in mind that is an important job benefit to be aware of and to think about how to get the most out of. All right, the next thing we want to talk about is building wealth at work with your retirement plans. And so there's, health insurance, great benefit. Another benefit that many people take advantage is saving and investing for retirement. And again, these do often have some tax benefits, and that's why we're going to take a look at those today. So there's really two main kinds of employer-sponsored retirement plans: defined benefit and defined contribution. And what we're seeing in our society right now is, that defined benefits are becoming much less available and popular, and defined contribution are growing. But just real quickly to understand the difference, defined benefit is kind of what we think of as sometimes people use the word pension, but it's where you go to work for somebody, and then when you retire, your retirement benefit is calculated based on the number of years you worked there, how much your salary was, and they put through a little formula, and you're told you're going to get this much per month. And it's all about the employer funding that retirement and then this calculation coming out. And you really, as an employee, don't have a lot to say about it. It just sort of, depends on how long you work there and things like that. Now, defined contribution is different in that typically both the employer and the employee will have the option to contribute money into this retirement plan. And the amount you'll have to use for retirement income will be dependent on some of the choices you make about how that money will be invested while you're while you're working. And so there's a lot more involvement from the employee and more risk really for the employee, because you need to think about how you want it to be invested and how much you want to be putting in throughout your working days. Now, I mentioned that these have some tax advantages. And what it really is that the US government really wants people to save for retirement. It's a lot better for society as a whole if everybody can fund their own retirement. And so what they do is they've made most of the employer-sponsored retirement plans tax deferred. And you might have heard that term and wondered what it meant. And it's really not all that complicated. It basically means that when you put money into the retirement plans, you don't pay taxes on it at that point. And the money so if you want to put in $100, let's say, you pay no taxes. So you're going to save that full $100, and that full $100 will be invested. Okay. Now, if you decided instead, no, I think I want to take that money home, I'm going to invest it myself, perhaps in the stock market, you'll pay taxes on it first. And here we're just estimating it at $28 out of 100. And so you'll have $72 to invest. Now, you don't get anything really for free. So when you do retire, you pull money from your tax deferred plans, then you're going to get to pay taxes on it. So it's sort of a question of when do you want to pay taxes? But typically, many people feel that having it saved in a tax deferred plan can give you that boost because you have more money being invested. And the idea being that your tax rate might be less when you retire as well. So that's kind of what they mean by tax deferred. If there's any questions, make sure to get them in the chat because I feel like I did that kind of fast. There's lots and lots of different retirement plans. And to me, they always look like alphabet soup. Clearly, the IRS had a lot to do with naming these things. You may have heard of 401ks. You may have heard of 403bs, Roths, SEPs, all these different things. Basically, the retirement plan that you have access to will depend on where you work. So 403bs and 401ks are really very, very similar, but 403bs are for nonprofits, educational places, 401ks are for businesses and more. There's things for if you're self-employed, like a SEP or a simple IRA or a Roth IRA. So really, the point being here is that there's something for everybody. So first ask at your employer, what retirement plans do you have that are tax advantage? And then if you're not satisfied with those or they don't have much, then explore what you can do outside your employer. It's kind of one approach to look at it. And yeah, we don't have everything listed. There's always more alphabets out there. Okay, so one more concept that I really want you to be aware of, and that is employer match. Some employers will say, if you contribute X amount to your retirement account each year, then I will match it. And so when you're trying to decide how much to put away towards retirement, one thing to consider is your match. If you put away $1,000 and your employer puts away $1,000, that's 100% return. Probably the best return you're going to get. So you might want to think about at least trying to get to your employer's match. Now, the employer match will not go all the way up to your full income. Everybody has a different amount that they will match up to a certain percentage or a certain number of dollars. And sometimes they don't match it 1-to-1. It might just be, I'll put in 50 cents for every dollar you put in. But either way, it's really good to kind of know what that is and think about how that might help you as you move forward. Okay. And then one other concept to keep in mind is vesting. So what vesting means is that when you're looking at a defined contribution plan or even a defined benefit and the employer is putting money in for you, they may say you don't have access to that unless you work X number of years for that company. Now, anything you put in is yours. That can move with you if you change jobs early. But what the employer puts in, they can set this vesting rule. So again, you want to ask what it is. If you're just, 6 months out from being vested, that might change when you choose to change jobs. And so it's really good information to know and to understand so that you can make informed decisions. I once talked to somebody that had been working for 9.5 years. Vesting was 10 years. He didn't realize it till after he had moved and changed jobs. And he was really very disappointed that he kind of, in a sense, lost all the employer contribution from that 9.5 years. So that really stuck with me. Okay, so now we're going to move on to saving early, and I'm going to turn this back to Nikki.
All right, so this is still kind of going along with what Kathy was talking about. You keep all those different plans at the forefront of your mind, but we're going to talk about why it's important to start saving early. Yeah, thanks. All right, so time is valuable. It's the miracle of compound interest. So you want to let your money that you have earn money by reinvesting it. So for example, if you earn interest on your interest in a savings account, or you invest in a retirement plan and reinvest your dividends. There was a lot of jargon, but basically it means you could, if you put all your money into a savings account in the bank, you're going to get a little interest. If you invest it in a retirement plan, that part of that plan reinvests what that plan makes, and maybe that's stock markets, mutual funds, etc., your money will grow faster. So this chart shows what I was trying to say. So this is the compound interest growth of $100 earning 5% interest annually for 30 years. So for example, let's start at the beginning. You invest $100 at 5%. At the end of that first year, you're going to have $105. But at the end of the second year, you'll have earned interest on that $105, which means you will now have $110.25. So you could see this big jump over 30 years that you're $100 at a 5% interest rate. By the time 30 years later, your $100 have grown to a little bit over 400. All right, so what does that mean? What does that look like for your retirement plan? So let's say you invest early, right? Let's look at that 22 to 30 year age. You decide to contribute 6,000 years annually. You will have saved $54,000 at the end. If you made contributions later in life, you will have you will have saved $54,000, meaning that's how much you personally have spent to save in that time. Whereas later, that is $210,000. And you could see the difference in you put in less, but the amount available at age 65 is more. Did that make sense? I kind of went through that quickly. But basically, the earlier you save, the longer that money works for you. And you save, it ends up taking less out of your own money, and you end up with more in the end. All right, so this graph shows exactly what that bar graph kind of the previous graph showed. You could see that even though the total early contributions was less by a lot, that orange line ended up with more than the green line that had to put in a lot more contributions later, but they wound up with less. So that was really quick. There's so much about retirement savings. So we do, of course, have other webinars that go just into retirement. We have several podcasts as well. This is the Family Financial Feuds, which Kathy helps with. They talk about retirement. Making Sense of Money also has a retirement podcast as well. And there we focus on retirement and also the Illinois Secure Choice Retirement Program. So we had mentioned this at the beginning that remote work could be viewed as a benefit, and some people have always been able to work from home, but I think during the pandemic, obviously almost everybody got to for at least a time, and now many people are returning to work, but in many different ways. Maybe it's you have to go back into the office all the time. You could be completely remote, or you have this hybrid option, which is, you could float between being in the office and being remote. So if the ability to work from home is important to you, you need to make sure in your job seeking process that you ask that up front. It can't be assumed that that is something that you'll be able to do. For example, I know my husband, he has an office job, but his office requires him to be there 5 days a week. This phenomenon of so many people working from home is still very new. And so researchers are still currently digging into all the data to see how the shift in the economy costs, what the actual costs to the consumer are. For example, we happen to know that the Chicago Federal Reserve currently is actually doing a big research project on this, but nothing's published yet because it's still so new. So these are just a few things to think about and compare before you start thinking about working from home, maybe permanently or in a hybrid situation. What are your transportation costs? Will you save money by not having to go to work every day? But on the other hand, being home all the time, can you afford the increase in utilities? That's everything from electricity to gas to maybe a higher internet speed that you need to make sure that you can connect to different programs that the job requires you to. Does your company provide any equipment like a printer or a computer or a phone? If not, are those things that you would have to purchase? And are there any stipends available for working from home? Some jobs say, we're not going to provide any of that, but we're going to give you a work from home stipend. Some jobs may say the benefit itself is working from home and those costs are on you. So these are just ideas to think of. There are also some tax implications as well regarding what you can deduct if you work from home. So again, that's very individual based on what you're doing and how you're working from home, what job, but there are some things you may be able to get deducted on your taxes. All right. So keep in mind, we are going through all these benefits, but not all employers have every single type of benefit. And even if they do, you personally may not be eligible for some benefits. It could be like Kathy was saying, you need to be vested. It could be you need to make sure that you're working there a certain number of hours a week, etc. All right, so this kind of shows the percent. This is from 2019, which is the most recent numbers. But retirement, 71% of all workers in America have access to some type of retirement. It doesn't say what type of retirement match, et cetera, just some type of retirement plan. Whereas management and professional, 86% do. Medical insurance, again, this does not include what type of medical care or how expensive it may be, but 71% of workers, again, and then 88% of management and professional careers. And life insurance, 60%, as opposed to 79. So we just wanted to show you those numbers so you could get a feel for who has more access to job benefits, who may not have what they need, so to make sure you're asking, etc. Yes, this is just full-time workers.
All right. Thank you very much, Nikki. So we're just moving right along here. We wanted to kind of pause in our presentation and have you think about which of all these different kinds of benefits that we've been talking about so far are really of value to you. Things are different for different people. And as we've kind of alluded to, as we've gone through, you're going to have to pay a piece of most of these. So I was just sitting here trying to think, what do we not have to pay for? Well, I guess I don't really pay for my vacation days. I get them whether I pay anything or not. But, what kind of benefits, maybe we can share it in the chat. Thank you, Erica, for kicking us off here. That retirement match matters to them. What else we got? All these insurances, those really do make a difference. What benefits do you have right now that matter to you? Paid family leave is important even when we don't get it. Insurance, disability, ability to work from home for childcare purposes, those 401ks and health insurance. Those are kind of often the big ones, I think. All right, I'll let people keep adding in there. Thank you for sharing, people. I ran across this survey that was done that kind of said, what do people consider when they're looking at benefits, people that were surveyed? And I thought it was interesting because, we've got the insurance right up there at the very top, better health, dental, and vision insurance. But flexible hours was way up there. Vacation time is way up there. Work from home options is way up there. So some of the things we might not always think about can matter quite a bit. And I think this is the things where you have to explore for yourself in your life, what matters to you. And some of these things change over time as well. So it could be a good reminder to ourselves to, if we signed up for our benefits a couple of years ago or more, to go back and revisit all the benefits that might be available to you from your employer and make sure you're taking advantage of the ones that matter to you now. And so when we're talking about job benefits, especially when you're in the looking for jobs mode, which I know some of our attendees were in that place right now, it is important to kind of think about how are you going to compare these job benefits? And so let's take a quick look at an example. So this is just an example of a woman who's been offered 3 jobs, Jenna, and each pays $20 an hour. She'll make approximately $3,600 each month. Jenna has 1 preschool child. So which job would you recommend she takes? Job A, job B, or job C? Because like the real world, job benefits and comparing them is kind of like comparing apples to oranges. So let's see what you all think. Which job, if Jenna was your friend, which one would you recommend that she take based on the job benefits? There's not necessarily a right answer here either, so don't fret that part. Job A. Okay, why job A? I see that kind of came up with exclamation points. Why did that one pop up? Because childcare is expensive, all right? That on-site childcare also means it might be easier with the commute and time and visiting. Nobody want to vote for job B or job C? That free lunch daily is not attracting you? Could be a good one, right? Sometimes people are very interested in more time off, more paid vacation, more paid sick leave. That could be important. So different things for different people. One way that you can kind of get a feel for this is to put a dollar value on these. So some of these you can put dollar value on, and that can be a way to help compare job benefits. But of course, some things like having on-site childcare and being close to a child, that's pretty hard to put a dollar value on. So it's not the whole story, but it is a way to help sometimes when you're looking at different job benefits and seeing which ones make the most to you. All right. Thank you, everybody, for doing that. And I hope it just also helps you think about what's important to you. So we've been going over a bunch of things with job benefits, but just to kind of summarize and point out a couple quick steps for success. One of the things that we've talked about is comparing benefits when looking for a job, remembering that you are going to get to pay for some of these, so if not most of them. So you want to make sure you know what you can afford before you jump into too many. You might want to sit down with a budget and think about that. Sometimes there's an opportunity to coordinate benefits with a spouse or a partner's benefits, where maybe one person has better health insurance options, somebody else might have more retirement benefit options, so you can look at that. And then I think it's really important to review choices annually. Things change in our life when we don't even think about how much they change. And so, giving that consideration and taking time to think about what do I need today and how do I make these changes, I think is really important. The one last thing I wanted to bring up before I turn this over to Nikki is when you're looking at different jobs, and this isn't really related to job benefits, but it often comes up, is to consider the cost of living differences. So you're probably, if you stop and think about it, aware that it costs a different amount to live in different places in our country as well as across the world. And it's worth, when you're comparing jobs, to take a look at that. And so Brooke just put a whole bunch of cost of living calculators in the chat. They're fun to play with to see how far will your salary go in Berkeley, California versus Peoria, Illinois. You might find that they go a little different. And even though the cost of living is different, the salary you're offered may not always be different enough to make up for it. So something else to add into your decision-making piece there. All right, Nikki, let's have you pick up the next piece, please.
Okay, so as we go through all these different benefits and we're talking about different ways to save money, it's important to think about, what are you saving money for? What type of goals do you have? And what are some ways that are easy to save? So just some tips, write down goals. That americasaves.org, they have lots of different ideas and worksheets and things like that to help you with these things. Just also be aware that small amounts add up. You may think that only putting away, into a savings account, maybe you can only afford $10 a month, but that over time is going to definitely add up. Automate your savings is very important. And this is something, especially when it comes to retirement, that they highly recommend, because when you get paid, it automatically goes into your retirement account or whatever account you may want. You don't have to think about it. You don't see it leaving. It helps to save. And then you don't want to avoid the high interest by having money set aside. So again, like we were talking about, if you put that money aside, you won't get charged as much, maybe when you pull it out later, etc. Kathy, can you move this side? Thank you.
So sorry.
It's all right. So the last slide we talked about, what are you saving for, right? Like and sometimes people are like, oh, I'm saving for my future, but what does that mean? And is there something specific that you're saving for? The more specific you can be and kind of go through these steps that we're going to go over, the more likely it is to be successful. So it's called a SMART goal, and each letter stands for something. So first, S is specific. So the more specific you are, the easier it is to define and save for. So this is like the who, what, where, when, why, how part of your goal. M is for measurable, especially when it comes to finances. It's easy to make this measurable because you could usually put some sort of dollar amount attached to it. A is agreed upon. What that means is if you have to somehow rely on others to achieve this goal, or maybe you're married and you need to discuss finances with your partner, that just means that you have contacted and everybody that needs to know about this goal that you would rely on knows and is okay with it. R is realistic. So everybody wants, right? Like, I would love to have my own private jet to go and fly to see friends whenever I want to, but that's not realistic. I know that on my budget. So make sure that you aren't over-promising yourself so that way you're just not disappointed. And if that means sometimes you may have to reevaluate priorities. Maybe you're like, you know what, I really do need a new laptop for for work. I'm working from home now. I need a better laptop. Like, make it realistic and realize that you may have to redo your budget based on your priorities. The T is for timely. So when do you want to have this goal or need to have this goal completed? So are you working with multiple goals that you need to consider when determining when you can have this goal achieved? This is just a way you think of SMART goals when you're thinking about your future. Research shows that if you write your goals down, you are more especially if you think through each part of this SMART goal, you are much more likely to achieve it. And so this is an example of financial goals, right? So the first one, let's say your goal is that you want to have a down payment for a house. So you know that you need $6,000. You want to give yourself 3 years to do that. And so how much do you need to save per month or per week to reach that target? Same thing you could do even longer term, a retirement savings plan. All right, so in summary, we talked about a lot of different things today, but when evaluating the value of your job, consider what benefits are offered to you. Make sure you pay extra close attention to your healthcare coverage so you know how much you have to pay out of pocket. Saving early for retirement greatly increases the amount that you will have when the time comes, and review your benefits every year and make changes as needed.
Okay, fabulous. We are close to wrapping up here, and we will have some time for questions at the end, but I just want to let you know before you all run off that we have another webinar in less than a month, November 10th, right around the corner, called Conscious Consumerism. We can think about how we spend our money, and also just a reminder that all our webinars are recorded and posted at this URL, and so that they will be, available to you. And there's a whole bunch up there, as we've already mentioned several times in this webinar, that might be of interest to you. So this one will give us a week or two to get it posted, but it will be up there, and we will be sending out an email to you with the link when it's ready to go. So we're going to go ahead and hang out and answer any questions. And I'd also like to encourage you to stay in touch with us. We have lots of great partners on this Get Savvy series from not only Illinois Extension, University of Illinois System, and IDFPR, which Nikki helped me with those initials, please, as well as DePaul University. So we're really always pleased to be able to present this information and share it with everyone. So Illinois Department of Financial Protection and Regulation.
Financial and professional regulation.
That's it. That's it. Okay. Thank you.
I know. That's why it's just IDFPR. Once upon a time, this agency used to be 4 separate agencies, which is why now it's such a mouthful, because they all came together and they combined all like the regulatory agencies together.
That makes total sense. Okay.
Yeah.
All right. So I know I saw a couple of questions and we're going to hang out and answer these. But, thank you everybody for coming. If you don't have any questions, we appreciate your participation and have a great day. So the first question, Nikki, I see is, do you have any recommendations for negotiating job offers related to benefits? Do you want me to start, or you want to start? How do you want to go?
So I'll go ahead and start. You can chime in, Kathy. My recommendation is, and this is just with my personal experience, has been to make a list of what you actually definitely need and what you may like. For example, for me, working from home is very important because I have a young daughter and I don't live in the city. So having to commute every day would cost me about 3 hours a day with her. So I was able to sit down with my boss and say, if I could work from home 3 days a week, I'm willing to give up X, Y, and Z. And it's really just making sure for me, my experience has been to have that list of, this is what I absolutely need. And this is benefits that maybe I don't need as much. For me, it was that I don't have, in this new office, the state of Illinois moved into a new building, and I gladly gave up my office so that I could work from home more. So that kind of give and take is my little negotiation tactic.
Yeah, and I'm right with you on there. And I have to honestly say, I haven't had to negotiate for a while. I've been working in the same place for a long time. So I think definitely don't feel like this is my expertise. But I think knowing what you want, I think exploring with others that might know that company or, have some insight into it. Some things are easier to negotiate in some places than others. So for example, at the University of Illinois, negotiating vacation days is just like, I don't know anybody that's really been successful at that, to be honest. Like, it's just sort of locked in place. But negotiating salary might have a little bit of leeway on that. So knowing the organization and knowing what's available, I think helps to know. But I think you're always okay to ask. And there was a question here about how do you figure or calculate how much salary you should be earning based on your education and amount of experience. Brooke, maybe you could put in those cost of calculator links again, because I know a couple of them talked about salary typically in different places and for different careers. I can't remember which ones exactly, but I know they were in that whole stack. Bureau of Labor Statistics also has a website about that tells you something about typical salary. You have to look at starting salary though versus mid-career salary. Those are different. So that's all, and geography can play a place in it too. I will say that if you are on a college campus right now, talking to your career centers, they work with salary negotiation a lot more, and also working with faculty in your department, because there are cultural differences on negotiating depending on the industry as well. So it's another reason I don't want to generalize too much.
And And I could see Anthony was asking about counteroffers, et cetera. So what I will tell you, we obviously don't know the specifics of your situation, and we can't give you tell you one way or the other what to do. What I will tell you is the advice that my current boss, who is the director of banking, has always given me before he was even the director of banking, is that he was the one who really pushed me to learn how to ask for more in my salary. And I know personally his philosophy is you should always counter offer, because you just never know. Like, it's one of those things where you'll never know if you don't ask, type of thing. So I have made counter offers before. And if you're balancing between one has a significant increase in salary but worse benefits, then you have to kind of actually sit down and put, like we did in this presentation, like put monetary values into the benefits, because it may not actually be that much increase in salary if you are paying higher deductibles on health insurance and things like that. So that Kathy, I don't know if you have anything you want to
No,
add
I think,
there.
Anthony, you're asking all the right questions. And I think you have you're understanding the pros and cons here very well. I think, we've been also really focusing on the financial piece, because that's what we do. But, there's more to a particular job than just the financial piece. So you may also want to think about, where do you want to live? What's the job like? What will be the people that you're working with like? And again, I think those can also be really important pieces, right? So, and I think it's fine to go back to somebody and say, I have another job offer. It looks better to me because the salary is, more. Can you offer any more? I'm really, and just ask that question.
And I think particularly given the state of the particular worker shortage, depending if for anybody who is going into looking for a new job or switching jobs, depending on your industry, if it's an industry that's desperate for workers right now, you do have a little bit more leeway, I feel like, to ask those questions, as opposed to where if we're in an economy where no one can find a job, that may be a different situation.
And anybody's willing to, I'm happy to take emails and talk to other people, but remember, this is not my expertise. Oh, career centers, think career centers. All right. Any other questions about job benefits or anything that we presented on that you'd like to know more about? I'm trying to see if we have anything that we missed.